I don't know about our values. We'll have to come back. Let me think about the values.
Okay.
But certainly people aren't going to be able to live as high on the hog anymore. Standard of living in the United States for the middle class is probably going to decline for the first time ever. We're going to see less eating out at restaurants. We're probably going to have to see, there's a lot of people that can't afford the house they're in. So perhaps we're going to see some societal changes. Maybe this is what you're getting at, where families share a house, or kids stay with their parents for a lot longer than they used to, rather than getting a job and then immediately going out and buying a 3,000 square foot house with a huge 1,000-foot home entertainment center in the basement. So we're going to see those kinds of changes. We're going to see more saving. We're going to see less debt. We're going to see kids who's going to be touched by the bankruptcies of their parents. They're going to see the arguments that their parents are getting in over money. We're going to see the breakup of marriages, and that's going to stay with some of these kids for the rest of their lives.
Right.
And they're going to vow not to make the same mistakes as their parents did, going so deep into debt. And that is a secular, not cyclical change that's underway. It's massive. No one's looking at that. No one in the media is talking about that. We're going to have a secular shift away from consumption to savings. The impact on families is all of those things that I just mentioned. No one sees this paradigm shift coming, but it is coming, and that's what we have to look for. That is actually a good thing.
Mm-hmm.
That we no longer focus on the me now society. I've got to have it now. There's going to be a shift towards, well, I'm going to save money till I can afford to buy it. That's a good thing, but it's not going to do wonders for the stock market.
Sure. Okay. On the jobs front, what are the kind of jobs, given this whole change in the demographic? And we just have a few minutes here, but any quick comments you have on the kind of jobs that, say, new workers in the marketplace or even mid-career people should be looking for and training for this new reality you're talking about?
A bankruptcy specialist. Actually, anyone coming out of college right now with a specialty in bankruptcy is probably going to be in demand, especially corporate bankruptcy of some kind. But I've been pondering that, and I keep asking that question, and my future is cloudy. I'm hoping that something comes by in the way of alternative energy. I'm hoping that something comes by in the way of medical advances, or something that can get our country off of having to pay trillions of dollars to Saudi Arabia, to Venezuela, to Mexico, to Canada, to all of the oil producers. I'm hoping that something comes by there. But occasionally we see some battery technology, some things like that. But we really need to get something like fusion working. It would really revitalize things a lot. Where the jobs are going to come from, probably, sadly, there's going to be more corporate welfare. Mm-hmm. We're going to have more government bailouts. Most of it is probably going to be useless type of work, all in an effort to stimulate the economy. We're in this mess because the economy was overstimulated. We were stimulated by housing. It was overstimulated by a war effort that padded the profits of the defense companies at the expense of the average taxpayer. It was overstimulated by all kinds of insane creative financial products invented by Wall Street.
Well, speaking of that, Mish, and we just got a couple minutes, do you think that people are going to get real jaded, skeptical views of the traditional financial planners they've had that have told them everything's rosy, everything bounces back, just hang with your current plan? Are they going to be fed up with that?
I think some of them got fed up right after 9/11. I think more of that is probably coming, right now. We've got a belief here at Sitka Pacific Capital Management that short-term gains are better than long-term losses. So we're having a good year, actually. We're up 15% in our two key strategies this year when the stock market is down about 15%. I think that's doing pretty good, and we're doing it without leverage. We have very high cash positions right now. We're sitting in a third cash in our two key strategies, and we're market neutral. We're not wildly shorting anything.
So translated, that means you're doing it in a responsible way.
Well, that's what we're trying to do. Capital preservation is our number one goal here right now, and we returned 9.5% last year, and we're up 15% this year. I think those are pretty good returns in light of what the stock market is doing. So, anyone that wants some assistance on that, they can, drop me an email, go on and find me on my blog, check out Sitka Pacific Capital Management, those kinds of things. But there's also just nothing wrong with being invested in CDs here. There's nothing wrong with saying, I don't want any part of the stock market. I'm going to put my money in CDs. I'm going to save it.
So is Mrs. Future and I doing okay in our tips that we have? Or?
Oh, my gosh. Now you're asking for personal advice here. I think that, let me put it this way. I think lower yields in treasuries are coming.
Yeah.
So I happen to like, and hardly anyone else does, I happen to like treasuries here. I reserve the right to change my opinion at any time, which means that no one's going to hear it. So that's the problem with the question, like that.
Oh, I didn't mean to put you on the spot there, Mish.
Well, I have an answer, and I happen to like, at least right now, treasuries. I happen to like tips, but that answer can change. Which is, one of the things. Another thing that we do at Sitka, we don't have a rigid opinion. There are some people out there that think gold is going to go to $3,000, or that oil is going to go to $300, or that silver is going to go to $200, or whatever, and they just remain firm in that belief. It's actually important not to be dogmatic about these kinds of things. For one reason, we don't know what the government's going to do. We don't know who the next president is. I strongly think it's Obama. But if it's McCain, maybe we get one kind of reaction from the market. If it's Obama, maybe we get another one. And certainly, if we pull out all of our troops out of Iraq, like I want to do, there might be a peace dividend in oil. So maybe the price of oil comes down just because of that peace dividend. Well, certainly, when you're threatening to blow up Iran every other week, that's not going to do much good for the price of oil. So we have all these factors. We don't know what kind of jobs programs the government's going to create. We don't know to the extent that the next Congress is going to be willing to spend the dollar into oblivion. Those are the kinds of questions that we need to wait and see what these politicians do when they get elected. Then we can, look a little bit ahead further. Right now, we need to see who gets elected and what those policy positions are.
Well, Mish, I hate to have to run, but we're out of time.
Yeah, you were great.
And I just want to say it's so wonderful having you back. It feels great. You are a hero to us and to all of our listeners. You ought to see the emails we get about you.
Yeah.
Thank you for your sacrifice of time on your blog, globaleconomicanalysis.blogspot.com, or just type in Mish, M-I-S-H, in the internet, and you'll find his incredible blog. You'll also find out how you can reach him at Sitka Pacific. Is that correct?
Sitka Pacific Capital Management, and just do a Google search for Mish, M-I-S-H. You can find me that way very easily. And it was a pleasure to be on the show again.
Mish, thank you for your valuable time you spent with us. And just thank you so much, and please come back again a lot sooner next time, okay?
Will do.
Okay, thank you so much, Mish. Thank you, and we will talk to you soon.